Hey everyone, it's Julie here with TipRanks. Today we're taking a look at dividend royalty that can provide stability during choppy markets. So let's get into it. All right, guys, welcome back. Thank you all so much for being here and TGI Friday. What a week it has been. In case you somehow missed it, markets have been on quite the roller coaster, with tariff news driving volatility throughout the week. So today we're going to take a look at some dividend royalty. That is dividend aristocrats and kings that can offer up some stability during uncertain times. When we look at the criteria to be considered dividend royalty, aristocrats boast 25 years of uninterrupted dividend payments and annual increases. And kings have that, but bump it up to 50 years. So why do we look to these types of stocks during a market downturn? Well, they have proven to be resilient cash flow machines. While stock prices might be on the decline, these companies are not lowering those dividends. Think about it. If a company can keep increasing their dividend throughout recessions, market crashes, and pandemics, they've got staying power. Dividend aristocrats and kings are often considered solid stocks with great fundamentals. So today we're going to take a look at 3 of these dividend royalty stocks that all come in with a strong buy rating from Wall Street. You can follow along over on the TipRanks website or by downloading the TipRanks mobile app by following links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these 3 strong buy dividend stocks. First on the list is Becton Dickinson. They trade under the ticker BDX. Currently priced at $198, the stock is down over 14% in the past year, most of that happening in the last few months here. They do currently score a 10 out of 10 on the TipRanks Smart Score, and it looks like hedge funds have been increasing their buying as the stock has dipped. This medical device company is on a 52-year dividend streak, giving them the prestigious title of Dividend King. Their most recent quarterly dividend came in at about $1.04 per share, giving them a yield of 1.9% and a healthy payout ratio at just 28.5%. Over the last 5 years, they have a dividend growth rate of 5.52%. And looking at our TipRanks AI stock analysis, they do come in with an outperform rating. Their recent earnings call highlighted robust growth and innovations, though some challenges in China and currency headwinds are noted. Dropping down to that earnings call summary, they saw 9.6% revenue growth and returned over $1 billion to shareholders in the first quarter. And with 9 current analyst ratings, the stock does come in as a strong buy with 8 buy ratings and 1 hold. The average price target comes in at $271, implying an upside potential of nearly 37% from current prices. Looking at those recent ratings down below, they range from an upside of 31% to a high of over 41%. For our second dividend stock, we're taking a look at S&P Global. They trade under the ticker SPGI, currently priced at $457 per share. Overall, in the past year, they are in the green, up 10%, but in the last 3 months are down about 5%. They currently score an 8 out of 10 on the TipRanks Smart Score. S&P Global provides market research, data, and analytics, and is primarily known for their credit ratings and market indices such as the S&P 500. They are also a dividend king, with dividend payments dating back to 1937 and 52 years of consecutive dividend increases. Their most recent quarterly dividend was about 96 cents per share for a dividend yield of 0.78%, which might not be the most attractive, but it is incredibly stable, and they have a very low payout ratio at just 23.5%. Their 5-year compound annual growth rate for that dividend is also quite attractive at over 10%. And on our TipRanks AI stock analysis, they also come out with an outperform rating. The company's strategic focus on innovation and sustainability is a key strength, while maintaining manageable debt levels remain crucial. Looking at their last earnings call summary, they did see strong revenue growth and an earnings per share and margin expansion, while returning $4.4 billion to shareholders through dividends and share repurchases. Just yesterday, an analyst from Bank of America reinstated coverage on the stock with a buy. They cite S&P Global's network effects, particularly across ratings and indices, as well as earnings per share upside it sees given the operating leverage in the rating business. There are 14 Wall Street analysts that all have a current rating on the stock, and they all come in with unanimous buys. The average price target of $602 implies an upside potential of 31.5%. Looking at those recent price targets down below, they range from an upside of 21% to a high end of over 38%. If you've made it all the way to our third dividend stock today, then do me a favor and make sure that you've hit that thumbs up button. Last but not least, we're taking a look at Sysyco. They trade under the ticker SYY, currently priced at $70 per share. They're down slightly on the year, about 4%, and about the same in the last 3 months, currently scoring a 7 or a neutral on the TipRanks Smart Score. This food distribution giant also comes in as a dividend king. They have paid and increased their dividend ever since going public back in 1970. And their most recent quarterly dividend came in at about 51 cents per share for a yield of 2.86% and a payout ratio of 46%. Their 5-year growth rate comes in just shy of 4%. And we have yet another outperform rating on our TipRanks AI stock analysis. While technical indicators suggest some caution, the company's reasonable valuation and shareholder return strategies enhance its attractiveness. In their last earnings call, they delivered over $20 billion in total revenue, a growth of 4.5%. They also saw their Sigma sales increase and announced an upsizing of their share repurchase plan to $1.25 billion. Just over a month ago, we did hear from an analyst at Wells Fargo. They noted that the stock's current valuation is near an all-time low, providing an attractive entry point for investors willing to capitalize on the anticipated recovery. And it seems that other analysts feel similar. With 10 current analyst ratings, the Sysyco stock does come in as a strong buy, with 9 buy ratings and 1 hold. The average price target is $85, implying an upside potential of 21%. And looking at those ratings down below, they range from an upside of nearly 10% all the way up to 31%. So that is a quick look at 3 strong buy dividend kings. While markets might be under pressure, these companies have boasted over 50 years of consistent dividend payments and increases, so we aren't expecting those to go away anytime soon. Let me know your thoughts on these companies in the comments down below and what other dividend royalty stocks you love. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thank you guys so much for watching. I hope you have a wonderful weekend, and I'll see you back here next time.